If you have the deep determination to succeed, you will not fail. Continue to dare to dream with me today. We are talking about real estate, and I'm your host, Denise Smith. I'm so glad you could join us today because we are talking about first-time buyers home programs, a brand new program that's come out. Sometimes they run out of money, but this year they have money. So please continue to watch us because we are talking about the home ownership program with the City of Oakland. All cities will have this program. So check in your city to see if you can find it with the First Time Buyers Home Program. It's very exciting, so continue to watch us today because I want to fill you up with the knowledge that you need to be able to purchase your first time house. The first thing with the First Time Home Buyers Program that you're going to need to know is that you're going to have to attend a class. And when you attend a class, you have to know that the information that you receive will actually be information that's going to help you to be able to purchase your first-time home. So what will happen is you go to this class and they'll ask you different questions. First of all, they want to make sure that you qualify. So the first question would be, have you ever purchased a first-time house before? If you've never purchased a house, let me tell you what qualifies you for that. If you've never purchased a house in the last 3 years, that means that you will be considered a first-time buyer. If you were displaced in a home where you were foreclosed on 3 years ago and you no longer able to live in that home, displaced means that you were forced out of that home because of maybe gentrification, maybe foreclosure, maybe something forced you out of that house. If you could prove that that took place, then you would qualify for the First Time Home Buyers Program. It's very important. You have to be a first-time buyer. What the City of Oakland is trying to do is they're trying to put into new people into the community. So if you've never had an opportunity to be able to purchase property, this is a way that we're building new communities so that you can find a way to be able to get a piece of the rock. You deserve to be able to own real estate. So what they do is they call it the strengthening of our community. So if you want to buy, I'll tell you some more tips, so continue to watch us. The first thing that I've already told you is that you have to be a first-time buyer. The second thing you have to do is put your paperwork together. Your paperwork has to be put together. So you have to put together a paycheck stub for 30 days, bank statements for 3 months, and then they want to see your W-2s for 2 years. If you actually put together those documents, you will be able to submit it to a bank and be able to get pre-qualified. The bank requires, there's certain banks that you will be able to partnership with that have to work with the City of Oakland. The City of Oakland will choose 13 banks that you can work with. So what you want to do is when you go to these programs or call the bank, City of Oakland, when you call them and you find out when exactly the classes are going to be, they will then give you the participating banks. But be ready to attend a class. And it might take 1 or 2 times for you to attend the class, but you will get your certificate so that you can qualify. So definitely be aware that you have to attend a class. If you do not like to attend classes, then maybe this first-time homebuyer program might not be for you. But it's a very simple class, and it's very educational, something that I think that you could use to take for your first-time home buyer and maybe even your second home. So the information's very good. The details of it is that you have to budget yourself for your home. Once you budget yourself, you see, you do not want to buy a home that you are not qualified for. You see, they'll give you up to $650,000 of a sale price. $650,000 of a sale price. Now you might say, I don't really want a house for $650,000. But the good thing is that the City of Oakland will lend you up to $75,000. But there's some details to that. So continue to watch us. The $75,000 is an actual loan of 3%. It indicates that you will not have to pay it back if you keep the property for 30 years. If you keep the property for 30 years, or if you sell the property or refinance the property, then you will need to pay it back. And there's an interest rate, a very minimal interest rate that they will charge you, which is 3%, which is a minimal interest rate for that amount of money. But if you decide that you want to keep that property and not move away from that property for 30 years, there's a possibility that they'll allow you to forgive that debt. So I think that it's a wonderful thing for you to do, because for $75,000, that's quite a bit of money. So if you look at $650,000 and you minus the $75,000, then you would qualify for the balance. But it's very important, they would like you to have at least 3% of the sale price. So that means you have to save up some funds. You have to save up some funds, and that's why they want you to have the bank statements. They have to verify the bank statements. You have to have it on there. If you do not have the 3%, you will not be able to qualify. So once you save up the funds that you're going to use to purchase your first-time house, from there you keep it in the bank. If there's any new money that comes to that bank account, they're going to want to know, where did it come from? Was it a loan? Was it a something of a something? It could, but most of all, they want to make sure that it's not a loan. Because if it's a loan, then they're going to want to add those debts to qualify for that loan. It's a very good thing for this first-time home buyers program. And every city has an opportunity to actually use these funds. So every city might have it, and some cities might not have it. But if you decide that you want to purchase real estate, check with your city. Right now, I'm speaking of the City of Oakland's program. So whether or not you decide you want to go ahead and purchase real estate for your first time, check into that program. Excellent, excellent program. When you apply for the real estate loan, and you have to do it again with the participating banks. Once you do it with the participating banks and you qualify for the loan, they're going to want to make sure that you have good credit. So if you have a situation where you have some credit challenges, if you have a specific reason why those challenges took place, then you would want to explain that. You see, because every situation is different. You might have gone through a death in the family, you might have had a car accident, you might have even had a divorce, or something that caused you to be delinquent on your debts. Very important that you have an explanation. You see, they will not deny you if your credit is in a way where you have some explanations. They'll only deny you if all of your credit is delinquent. So every situation is isolated. So if you say to me that you have some challenges in your credit, do not deny your own transaction. What you do is you just look and make sure that you contact every single creditor that's on your credit report. So first, you pull your credit report, you look what's on there, and every single creditor that is showing delinquent, you will then write a letter to that creditor. Very important, because once you write a letter to the creditor, you will let them know to prove to you that you owe these funds or owe this amount of money that they're indicating. If they cannot prove to you that you owe those funds, then they're going to have to take it off of your credit report. They have to tell you within 30 days, prove to you within 30 days that you owe them those funds. If they cannot prove to you that you owe those funds, then you will then be able to get it removed from your credit report. You then write a letter, put it on your calendar, 30 days, write a letter. If they have not responded to you, write a letter back to them and say, you have not responded, please remove from my credit report. That's how you start your credit history so that you can clean up anything that's on there so that then when you're ready to purchase real estate, you'll be ready. The bank always wants to look at your credit. They want to also look at how long you've been on your job. Now, if you've only been on your job for 2 years, that's okay, as long as you've been in the same line of work. Very important. See, if you've changed jobs, but yet you've gone from all different types of jobs, they're not happy with that. But if you're in the same line of work, same field, but yet you got laid off and you received a new job, but you're in the same line of work for 2 years, you're in good shape. You should be fine. They will be able to qualify you. Also, you know, you can qualify for with Social Security income. You can qualify with disability income. As long as it's permanent disability, you can qualify. So always consider how much income you receive and always consider your credit report. You want to make sure and get your credit report before the bank does. You don't want the bank to tell you what's on there. You want to already know what's on that credit report. When you apply for the home loan, they're going to ask you questions. And some of the questions at first are going to be kind of concerning to you because you feel like you don't want them to get into your personal situation. But it's very important that you give this information to them and give it to them freely. You see, they're going to want to know what your debts are. Who do you pay on your debts? Do you car loan, student loan, insurance, different types of debts that you have. You have to be aware of all your debts. And you create a budget for yourself so that when you walk in, some debts they will not even include. So if the auto loan is less than 10 months, they won't even count that auto loan because they see that you're going to pay that auto loan off within the next 10 months, so they won't count it in your debts. The bank generally would like to see that you're within 38% of your gross monthly income. What does that mean? That means that if you make $1,000 of income, 38% would make $380 would be the maximum that they would qualify you for. $380, but that would include your mortgage, your taxes, your fire insurance, because you have to have fire insurance. In the event your house burns down, they want to make sure that you have fire insurance so you could rebuild that house. So they're going to include those items in your debt. Again, it's your mortgage, your taxes, your insurance. Principal and interest is considered to be your mortgage. And then you have to look at your credit card debts, your auto loan, student loans. So all of that has to come out of that $380 if you make $1,000 in income. I hope I was able to make it as simple as I possibly can because I want you to understand that you can purchase real estate. And with all the programs that are available to you right now, there's no reason why, if you get your credit report together and you have been on your job for at least 2 years, there's no reason why you cannot purchase real estate. Just look at all of your debts and make sure that you pay them on time. Very important. The roles of a professional real estate agent. When you decide that you're going to purchase real estate, you need to choose who the best real estate agent or broker that you would like to work with. So you can interview them. You can interview them, talk to them, ask them questions about the process, and find out if you're going to work with them for at least 6 months, maybe a year, maybe even 3 to 5 years. You don't know how long it's going to take you to be able to purchase real estate. But you want to work with a real estate agent that you trust, a real estate broker that you trust, one that you know that you're going to give them. Usually the real estate agent and the real estate broker, you don't need to give them your financial information. You give your personal financial information, you give it to the bank that's going to pre-qualify you. And we've already talked about the documents that you must put together to get pre-qualified. Also, if you go with the City of Oakland's first-time homebuyers program, they're going to require that you get an inspection. You got to get an inspection. Once you get that inspection, what they're going to check in that home, which is really important, is that they're going to check the electrical, the plumbing, the foundation, the roof. They're going to make sure that that house is in good shape. And the City of Oakland, the home buyers program, is going to require that you have an inspection so that you're satisfied. As a first-time buyer, you do not want major items to come up after you purchase your property. You see, you've put your down payment, you have only so much money allotted for that mortgage. Generally, it's a good idea. They don't require it, but it's a good idea, and I would recommend it, that you would have at least 6 months of a mortgage payment in the bank in the event that anything happens that you did not expect. You see, you have to make sure in the event that maybe if you lose your job, you never want to expect anything to happen, but you want to be prepared for it. So when you purchase real estate, you don't want to use your last dime in that 3%. You want to have a cushion. So you want to be able to save up at least 6 months in the bank for that mortgage payment. So what does that mean? If your mortgage payment is $1,000 or $500, let's just say $1,000. If your mortgage payment is $1,000 a month, then you want to have at least $6,000 in the bank in the event anything happens to you. You know, I was always taught that you have to save for a rainy day. And you know, the rainy days do come, so you have to be prepared for them. So make sure, and if you don't have 6 months, minimum 3 months of a mortgage, so that in the event anything happens, you will be prepared. I've had so many people that I've helped to purchase real estate, and this first-time home buyers program was very, very popular back many years ago. I'm so glad that they were able to fund it again this year so that it could help a lot of first-time buyers. Now, the first-time buyers have different options that they can purchase in real estate, but there's also something that you should be aware. If you decide that you want to purchase real estate in a certain location, I would truly recommend that you drive around those locations. Find the area that you are interested in, so that when you're driving around, you have a good idea of the neighborhood. You want to know where the grocery stores are located. You want to know where the schools are located, where the bus stop is located, how far close to transportation or carpool. Very important. You see, because you're going to live there, and you want to know in all hours of the day what that neighborhood looks like. So I would drive by in the morning, I would drive in the afternoon, I would drive late at night. I would really highly recommend that you know what neighborhood you're moving into. You see, when you have your family there, you want to make sure that it's safe, of course, but not only that, you just want to know what items are around the location. We've had, as insurance requirements, there's really important that your insurance is up to date. So you shop your insurance. You can, at the time that you decide that you want to purchase real estate, you could interview different insurance agents, just like you would do with a real estate agent. When you shop the insurance, you will actually be able to see exactly how much it's going to cost you for fire insurance. So and they all vary like anything else. Banks vary in their interest rate. Insurance varies in their cost. So you could shop the cost just to make sure that it is adequate. If you know someone that you trust that you would like to purchase real estate with, I think that you should interview them. You see, because if you buy something with someone else, the first-time home buyer just requires that one person is a first-time buyer. But if you decide you want to buy with someone else, I would highly recommend that you actually look at their credit as well. You see, because when you're combining your efforts with someone else, you want to make sure that you've combined your efforts properly. You want to make sure of their income, and you want to make sure of their credit. But if you're the only first-time buyer in the group, let's say you're married, and you're the only first-time buyer, the City of Oakland requires that one person to be a first-time buyer. They call it low to moderate income. But low to moderate income means that you're under a certain income bracket. And the bank will tell you, and when you go to the class, they will qualify you to see if you're in that income bracket. That's really important. You see, if you decide that you don't want to buy up to $650,000, and maybe you want to buy a lower home because of the fact that you have a child that maybe is in private school, or you have another debt that you might be responsible for, you might want to decrease the amount that you buy, because you don't want to stretch yourself so thin that you find yourself at a point where you cannot qualify any longer after you close that transaction. You want to be real careful. There's been some questions that I've had that have gone by email. And the questions, the number one question that came up to me when they asked me about this was, if I decide that I do not want that house after I buy it, is it like a car, a lemon? Can I give that house back? And the answer is no. You have to sell the house. And you can't just call the bank and say, I no longer want this house, I got to give it back. I received an email asking, can I give the house back? And the answer is no. You have to actually sell it. So that's why you want to make sure that when you buy the house, that it's in its fair market value, and that when it's time, if you decide you want to sell it in a year or 2 or 3, you want to make sure that you bought it at the right price. Comparable sales are in the area are houses that have sold in the last 6 months. And that's what the appraiser looks at, and a good real estate agent will be able to tell you just what's sold in the last 6 months, so that they can make sure that you're buying the property in its fair market value. I need that note again. I'm going to say it again. If you're trying to buy property and you've decided later on that you do not want that property, then you want to make sure that you bought it at the fair market value, because you could lose money if you sell it within a year after you bought it. So you want to make sure that it's fair market value, and you want to make sure that you're happy with that property. Sometimes people get really excited and they get caught up with the process, but I think that you want to make sure that you are buying it in its value, fair market value, and that it's really truly the house that will help all of your needs. This is very important. The First Time Home Buyers Program is a program that I think everybody should look at, but I also think that it might not be for everyone. Why? The application process. It has different reasons. First, you have to call the phone number. And I'm going to actually give you the phone number that you have to call in order for you to first get a class so you could attend. And the number is 510-238-7486. That's just to sign up for the class. I'm going to say it again. 510-238-7486. Once you do that and you sign up for the class, then you'll be able to then look for the banks that are partnering with the City of Oakland's program, and then you could work with those banks to get pre-qualified, and then you could choose your real estate agent. And once you choose your real estate agent, you all work together to help you to realize your first-time home. It's an exciting time right now because values are lower than they've been in a long time. So you really can't qualify. The rates are also at their all-time lowest. And I really think that you should take advantage of the low rates right now. There's also a program that you can look into as well. There's a program with NACA, Neighborhood Assistance Community of America. That's something that you can check into, because that's another program. They have several programs available to you. And if you could check into the different programs to assist you and help you to purchase real estate, you will be a homeowner before you know it. And I know that you're able to do it, you see, because as a real estate broker and being able to help so many people realize their first time purchase, I know people now that are working on their second and third and fourth time purchasing property. So if they can do it, you can do it too. The other process that you have to go through is you have to coordinate with the closing. So you have to have a title company. Usually the real estate agent will be able to, or broker, will be able to give you a good escrow officer that they work with. But it's no time like the present. Check out different title companies. There's all different types of title companies that you can actually interview and find out. You can find out what their fees are, and you have to have a loan program. It has to be an actual insurance that the title company will actually do for you. So they'll have to make sure that you get clear title to that property. The prior owner of that property had liens on the property, and the title company makes sure that all those liens are paid in full, so that when you buy the property, that you have clear title. So it's okay to check out title companies and interview title companies to make sure that you can find out the cost. You see, this is all groundwork that you could do while you're looking for property. Since it might take you a little while, at least if you pull your credit report, make sure that you know what's on your credit report, get your income documentation together, your paycheck stubs, get all your stuff together, your bank statements. You'll be ready so that when you submit to the bank, you will be able to get qualified. You have what we call a blank check to be able to purchase real estate. Very important. If you have thought about buying real estate before, and maybe you're not a first-time buyer, maybe you are a second-time buyer, well, this first-time buyer program may not work for you, but there's other programs that will work for you. They have a rehab program right now that you will be able to look at, a rehab program where you could actually purchase property and then get a loan to fix it up. Check into that program if you're a second-time or third-time buyer. There's wonderful programs for you to actually look at to purchase. You know, I know what you're able to do because I've done it myself. So I'm not telling you anything that I haven't done myself. So I want to leave this with you to know that if you know that you want to buy real estate, you can call me at any time, ask any questions. I'm the author of From Rags to Real Estate. I am a happy homeowner, so I want you to be a happy homeowner. So I'll leave this with you. If you have the deep determination to succeed, you will not fail. Continue to dare to dream with me, your host, Denise Smith. And always remember to purchase real estate. It's the best thing you could do.